You're welcome back. Now let's look at the next requirement of this question, which is to prepare a partner's capital account. We have our partner's capital account in columnar form, A, B, and C. From the question, the balance in their respective capital account was 20,000 for A, 17,000 for B, 25,000 for C. Let's transfer these to the capital account. Okay, and that will be the balance brought forward. For A is 20,000, for B is 17,000, and for C is 25,000. The next is the share of profit on revaluation. Okay, and from the revaluation account, the profit on revaluation was shared equally, A having 1,333 and B and C having the same amount. So let's transfer this to the credit of the capital account. So the share of profit on revaluation for A will be 1,333, B will be 1,333, and C will be 1,333. Okay. The next is the share of goodwill. We debited the goodwill account and we credited the partner's capital account. Okay. From the goodwill account, you will see that the share of goodwill in the old profit sharing ratio for A is 2,667, while B and C takes the same amount. So let's credit this to the partner's capital account. Okay, so the share of goodwill for A will be 2,667, B will be 2,667, and C will be 2,667. To remove the goodwill from the books, we credited the goodwill account and we debited the partner's capital account. From the goodwill account, you will see it was credited for B with 4,000 and for C with 4,000. So let's do that into the partner's capital account on the debit. So we have share of goodwill. B is 4,000 and C is 4,000. The remaining items are the furniture and fittings that was taken over by A in part settlement of his final settlement, while also is the additional capital to be contributed by B and C. In the journal, the asset taken over, we debited the partner's capital account for A and we credited the furniture and fittings account. So let's debit the partner's capital account with the furniture and fittings taken over under A, and that will be 5,100. We were also told that B and C were to contribute additional capital, B contributing 10,000, while C contributing 6,000. And for that, we said we'll debit the bank account and credit the partner's capital account. So let's credit the partner's capital account. So we will have bank. For B is 10,000 and for C is 6,000. Okay, so we have posted all the relevant transactions into the partner's capital account. So let's balance it up. For A, the total on the credit is 24,000 and the total on the debit is 5,100. The credit is higher than the debit by 18,900. So let's have it there as 18,900. Now, since A is leaving the partnership, this 18,900 will represent the final settlement to A. So we have bank 18,900. Now for B, the total on the credit was 31,000, while on the debit is 4,000. So the credit is higher than that of the debit with 27,000. Okay, and that will be the balance carried forward. Alright. On the credit, for C, the total was 35,000 on the credit, while on the debit, it has 4,000. So the credit is higher than the debit by 31,000, which is also the balance carried forward. Okay, So at the beginning of the next period, we will have balance brought forward. B will be 27,000 and C will be 31,000. And this is how you prepare the partner's capital account when a partner is retiring or when a partner dies. In the next video, we will look at the bank account. Thank you very much. See you in the next video.